This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
In the financial markets, many participants take a passive approach, simply accepting whatever average returns the broader market provides. However, there is a distinct group of operators who actively seek structured approaches to analyzing markets and managing risk, looking for structured ways to identify momentum and manage risk. Mark Minervini is one of those individuals. He did not start his career on Wall Street, nor did he graduate with a degree in finance. Instead, he spent decades studying price and volume behavior to build a strict, rules-based framework. Past performance does not guarantee future results, achievements that occurred more than 2 decades apart. When observing how Minervini operates, a clear concept emerges. He has publicly described his trading approach as a structured and rules-based framework. He operates under the personal philosophy of trading as a business. In his framework, protecting capital and following strict risk parameters are always the highest priority. Welcome to Trader's Journey, a part of Trade Alive, brought to you by IUX Education. In this episode, we will look at the case study of Mark Minervini. We will observe the specific charting concepts and risk rules he applies in his own trading account. To understand Mark Minervini's operational framework, it is helpful to look at his beginnings. He started his career as an independent participant. He did not have institutional backing, Wall Street mentors, or access to exclusive financial data. Instead of relying on privileged information, he relied heavily on self-education. Spending thousands of hours in local libraries, he analyzed numerous texts on finance, market structure, and market history to build his foundational knowledge. However, he observed that theoretical knowledge alone did not align with his goal of studying historical market trends. To build a more systematic approach, he decided to study historical market data through a process of reverse engineering. Rather than attempting to invent complex mathematical indicators, he gathered decades of market data and examined stocks that had experienced notable price movements during specific periods. Instead of studying them at their peak, he analyzed their fundamental and price structures in the periods just before those upward moves occurred. He was searching for common structural characteristics. His goal was to study characteristics that were historically observed prior to periods of increased market demand. Through this process, Minervini formulated a perspective that differed from some traditional investment theories. While many value-based approaches focus on finding assets that appear undervalued or discounted, Minervini's historical data observations suggested a different dynamic. According to Minervini's observations, assets appearing mathematically expensive often coincided with periods of higher demand, while assets appearing cheap were frequently in a state of distribution or declining interest. This observation shaped his personal trading rules. He established a strict parameter for his own portfolio. He would avoid purchasing assets that were in a structural decline. From that point forward, his criteria required assets to be firmly established in a clear, observable uptrend. By focusing on market momentum rather than perceived discounts, the self-taught student transitioned into a highly systematic market operator. To construct his structured approach to the markets, Mark Minervini understood that Minervini concluded that buying assets solely because they appeared undervalued did not align with his preferred methodology for his specific goals. He required a systematic filtering process. This led to the development of his core analytical framework, known as SEPA, or Specific Entry Point Analysis. In the context of his trading as a business philosophy, the SEPA system functions much like a strict purchasing department. It filters the broader market to identify companies exhibiting strong, fundamental characteristics, such as consistent earnings growth, increasing sales, and solid profit margins. To pass this initial filter, the asset must demonstrate measurable fundamental strength. However, identifying a company with strong fundamentals is only the first step. Minervini emphasizes that deploying capital at the wrong time can still result in a poorly managed risk profile. Before any capital is allocated, the asset must pass through his final structural filter, the Volatility Contraction Pattern, or VCP. The VCP is not merely a geometric pattern, it is his method for observing market behavior. In Minervini's view, when large institutions seek to accumulate an asset, they often do so gradually to avoid significantly disrupting the price. During this observed accumulation phase, impatient participants often sell their positions. This process creates a market dynamic often referred to as supply drying up. On a price chart, this dynamic visually manifests as volatility contracting from left to right. A broader price consolidation might initially swing by 20%, then tighten to 10%, and eventually compress to a very narrow range of just a few percent. Some traders interpret periods of tight price contraction as a potential reduction in selling pressure. It suggests that the available market supply at that specific price level is being absorbed. According to Minervini's framework, when supply is depleted in this manner, it has historically been interpreted by some traders as a condition that may precede further price movement if demand subsequently increases. This is his preferred point of execution. Operating strictly within his systematic rules, Minervini allocates capital only when both fundamental strength and this specific structural contraction align. When a price contraction aligns with his structural criteria and moves out of its consolidation phase, Minervini executes his position. However, one of the most important components of his operational framework is not his entry strategy. It is his framework for capital preservation. Trading high-growth equities involves specific market realities. When broader market conditions undergo a correction, assets that previously exhibited momentum may experience periods of price decline during changing market conditions. For many market participants, watching the value of their portfolio decrease is psychologically challenging and often leads to poorly managed positions. Minervini manages this specific challenge by treating his trading operations like a structured business. Operational rule: never let a profitable trade turn into a significant loss. This reflects Minervini's personal risk management framework and should not be interpreted as universally applicable. One element of his personal framework reportedly involved exiting positions after predefined loss thresholds were reached. When the price of an asset reaches this predefined threshold, he executes his exit strategy without hesitation. He views this action simply as liquidating underperforming inventory to protect his primary capital base. This strict risk protocol is rooted in the fundamental mathematics of drawdowns. If a portfolio experiences a 50% decline in capital, it mathematically requires a 100% return simply to recover the initial principal. Therefore, executing a stop loss is not viewed as an operational failure. It is a calculated business procedure. This strict adherence to risk management is intended to help preserve capital for future opportunities, to participate in future opportunities. To better understand Mark Minervini's methodology and market approach, it is essential to examine his psychological framework. How does a market operator maintain such discipline over decades? The answer lies in his fundamental paradigm. While some participants view the markets casually, Minervini has described his trading approach as operating with a business-oriented mindset. When he allocates capital, he tends to view the stocks in his portfolio similarly to corporate inventory. If a product in a traditional retail business sits stagnant, a competent manager might clear the dead inventory to free up capital for items with higher demand. Minervini applies a similar logic to his portfolio. If an asset no longer meets the conditions defined within his framework, he typically exits the position to reallocate funds towards setups that better meet his structural criteria. Executing this type of systematic approach requires a high degree of objectivity. In market operations, emotional attachment or personal pride can often interfere with sound risk management. Minervini has stated that he seeks to make decisions based on predefined criteria rather than emotional reactions. For example, if his risk parameters indicate a position is breaking down, he will exit to protect his capital. However, if that exact same asset structurally repairs itself, absorbs market supply, and forms a new valid contraction pattern, later that day, he is willing to repurchase the asset even at a higher price. This systematic execution highlights another core component of his methodology: the pursuit of mathematical consistency. Rather than attempting to capture unpredictable, massive gains on every trade, Minervini's framework focuses on identifying price movements that align with predefined criteria within his methodology, often seeking predefined profit objectives based on his own methodology. By focusing on these specific target profiles and consistently applying his risk rules, the framework incorporates concepts associated with compounding over time. His approach suggests that long-term participation does not necessarily require capturing rare market events, but rather maintaining a disciplined, repeatable process. The historical track record of Mark Minervini provides an interesting case study in systematic market operations. He utilized his SEPA framework and his strict risk management rules to participate in and win the United States Investing Championship in 1997. Decades later, in 2021, operating in a modern era characterized by algorithmic trading and different market dynamics, he returned to the same competition. This historical performance relates to a specific period and should not be relied upon as an indication of future performance or results. This historical continuity suggests that his core concepts, specifically the volatility contraction pattern and his disciplined business methodology, have continued to be referenced by Minervini across various market environments. As we conclude this case study, it provides an opportunity to review your own market analysis and risk management protocols. What are your thoughts on the concepts discussed in this case study? And treating trading operations like a business? Share your perspectives and inventory management strategies in the comments below. Let us know how you approach periods of market volatility. For additional educational resources on market structure and risk management concepts, visit the IUX website. We provide comprehensive educational materials to help you study the mechanics of trend analysis, observe price contraction patterns, and learn more about market structure, trend analysis, and risk management concepts in various market environments. Thank you for joining us as we explored this systematic approach to the markets. This has been Trader's Journey, a part of Trade Alive, brought to you by IUX Education. Many market participants consider systematic execution and emotional discipline important elements of their trading process. Manage your risk, maintain your discipline, and goodbye. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.